Good evening, everybody. Thank you so much for joining us today. You are at the From Here Forward program for Ventura County Community Development Corporation. Thank you so much for registering for this informational session on our newest program, offering up to $100,000 in down payment assistance for home buyers in Ventura County. So just a few housekeeping items. We will be here for about 45 minutes or so. We will leave time at the end for questions. You can enter your questions in the chat box, and I will be giving them to Alex Vega, our presenter, at the end, and he'll be responding to them. If we don't get to your question, please rest assured that we can answer them via email, and we'll give you the contact information for that. And if you are on a mobile device, it won't say chat, but you will see an icon with a question mark on it, and you can enter your questions in there. So today's presenter, Alex Vega, he is our Director of Lending Services. He's led VCCDC's mortgage lending division since 2007. Under his leadership, he has and his team have been able to award more than $8 million in down payment assistance and more than $140 million in first and second mortgage financing throughout the counties of Ventura, Santa Barbara, LA, and most recently Kern County. He has been doing this for a while, 20 years of financing experience, and he holds a Bachelor of Arts degree in International Business Administration from Cal Fullerton. It is important to note that all information in this presentation is deemed accurate to the best of our knowledge at the time of this presentation. And at the bottom, you will see VCCDC's mortgage broker license, DRE number and NMLS number, as well as Alex's. So our agenda for today, again, we will be reviewing the From Here Forward program. We'll give you a brief overview of VCCDC, program summary, program requirements, and the next steps that you can take if you would like to see your eligibility for either this program or other programs that VCCDC offers. And as explained, there will be a section at the end for questions. Now I will give the floor to Alex. Let me give me just a second here. Okay, so you can take it away, Alex.
Great, thank you, Kaylee. All right, so we should have our presentation here. You able to see that, Kaylee?
Yes.
Okay, great. Good evening, everyone. Thank you for joining us. My name again is Alex Vega. So really excited to talk about one of our greatest, newest programs from here forward. And let's go into a little bit of an overview of VCCDC first. And VCCDC was incorporated in 2001. We're a nonprofit organization here in Ventura County that serves the entire state, but really focused on Kern County, Santa Barbara County, Los Angeles County, and Ventura County. Our mission is to strengthen and sustain vibrant communities and empowering individuals and families to build wealth through education and home ownership. And our primary focus really is just low and moderate income families and individuals. We offer a wide range of services for both individuals, families interested in purchasing a home of their own, which starts with educational workshops, one-on-one type coaching as a first step to get started, and then the mortgage lending with different layers, multiple layers of financing, which is pretty unique on a national level. And because we incorporate so many different types of programs and products to bring home ownership within reach for buyers. So why VCCDC? We've had an excellent track record in administrating public funds that have been allocated from so many different types of, so many sources, federal, state, local, and private, in fact. Since 2007, we've received over $8 million in this specific home from Cal Home Funds from the State Department, Housing and Community Development in the state of California. And through these grants, these grants derived originally from the state bond that was issued in 2003. This is just to kind of give you a little background of where these funds ultimately, where the genesis of these funds occurred. The idea is to be able to provide down payment assistance or closing cost assistance or both to eligible buyers with which is a deferred loan for 30 years at a 3% simple interest rate. So this one here is a very similar program. Now, when we talk about this From Here Forward program, and what this is entitled, or what the idea of this was, to make the Cal Home Funds available to eligible buyers within our jurisdiction here in Ventura County. And to nonprofit organizations. So the first-time homebuyer mortgage assistance is a gap loan that is allowed. We can provide it to people that are at 120% of the area median income or below, and that were affected by the Thomas or the Woolsey fires in Ventura County, 2017 and 2018 respectively. Those fires that devastated our community. Now, we'll talk about what the 120% area median income is, and how these monies are intended to be used here as we go forward. So let's talk about what the definition of economically or physically displaced. So if you were financially or physically affected by the Thomas or the Woolsey fires, then you could potentially be eligible for this program. So it's anyone that had their home destroyed or had their home impacted, their lives impacted as a result of one of these two fires, these natural disasters. Displaced is going to mean that anybody that was evicted or eviction or voluntary termination due to a 5% increase in rent. So let me start over on that. Who's eligible is anyone that was ultimately directly affected by these fires. If you lost your home or had your home impacted by this, or lost wages as a result of these fires. I'll give you an example. One of the hospitals in Ventura, which was burned down, a lot of nurses, doctors, and staff there had not been able to go back to work. So their income was financially impacted or directly impacted because of these fires. This would be a segment of the population that would be eligible for these programs. So this is the direct impact. Now, there was also an indirect impact in the economy and the community, which was a shortage in what already was a housing crisis in our area. When we lost a lot of our housing stock as a result of these fires, there were a lot of displaced individuals, and we did see, and we have continued somewhat methodically, been able to see that rent increases began to happen pretty rapidly shortly after the fire, because there was an enormous demand for rental units or for housing, and a very low vacancy. So if someone would also be indirectly affected by these fires or by what happened, if you can prove that your income or your rental payments, have increased by 5% or more after these disasters. So if you're currently rent burdened by 5% or more, the increases, you could potentially be somebody that is eligible for these programs. Now, all of it would be on a case-by-case basis. We do have to show and prove, and we are working with the state, because this is a very new program in what it is intended to help, which were disaster victims. So we will work on a case-by-case basis and look at all scenarios very carefully. So again, somebody that owned a dwelling would be somebody that was economically or physically displaced, had their dwelling unit. This is coming directly from the guidelines. So although I know it seems like it's a lot of language here, we want to put that out there for you to see. But again, this disaster that was brought on and no longer are able to live in your dwelling because of compliance or code, or it's just too expensive to rebuild. So these funds are for new purchase to be able to buy a new location, a new 1 to 4 unit property. You do need to be a low income or a moderate income household size. Now, a low income household size is anyone that's 80% or below of the area median income as a household in Ventura County. A moderate income household means 120%. And we're going to look at those numbers a little bit in a little bit. And so again, household is anybody that's over 18 years of age in the household. All of the income that's being earned, we would add that up and determine if you are a moderate income household size or a low income household size. Here's the eligibility. This is what we're looking at in Ventura County. So for example, a household size of 4 people that is earning $117,350 or less per year would be considered a moderate income household if you're under this amount. If you're earning $90,350 as a household size of 4, you would be considered a low income family. So that's when we look at household size, where you are, think about where your family size is at, and where your income is. And if you're below that number, specifically this number, you have a really good possibility of being eligible for these programs. One, and if you have noticed that if we can show that your rental housing has increased by 5% or more, or if you were financially or directly impacted, physically impacted by the Thomas and Woolsey fires, then you have a really good chance of being eligible for this type of down payment assistance programs. Now, part of the eligibility is that you also have to be a first-time home buyer to be able to take advantage of this. Now, for those that owned a home and were displaced as a result of losing that home, there is a caveat to that because you obviously wouldn't be a first-time home buyer in that situation. But again, because you were directly impacted, then this still applies for you. A first-time home buyer is anybody that has not owned a home in the last 3 years. Also, a first-time home buyer, want to get these definitions because they are important, is anybody that was displaced. So if you have a spouse or owned a home together and that home was sold or a divorce, then that displaced spouse would be considered a first-time home buyer once again. Okay, here's some other definitions. I won't go into the details on all of them. I just kind of want to pick up on these points. So basically, the obvious is if you've never owned a home in the past, if you did own a home, but in the last 3 years you have not owned a home, then you are considered a first-time home buyer again. If you did lose a home as a result of a divorce or sale because of a divorce in the past, no matter what time frame it was, then you would be considered a displaced spouse and again, potentially a first-time home buyer as well, okay? One of the common questions that we have is if you own a mobile home, are you considered a first-time home buyer? And the answer to that is yes, because a mobile home is not considered real property. It's considered personal property. So again, that's more vehicular, and you would be considered a first-time home buyer if you had a mobile home and purchasing a 1 to 4 unit residence. Some more of the eligibility here is how these funds are going to be allocated. We did receive $3 million to be able to issue out in the community. So these funds are on a first come, first served basis. And what first come, first served will mean is after you've been eligible and you get a pre-approval for these programs, people are going to go out and shop, and it's going to be those that have a fully executed purchase agreement that would be the first that these funds are going to be reserved for. So we will be issuing out pre-approvals, but not until you have a fully executed purchase agreement that the fund will actually be reserved for you at that point. There is going to be a 1% minimum contribution from the borrower's own funds. So for example, if you're an escrow on a $500,000 home, then at least $5,000 of that amount needs to be proven that it comes from borrower's own funds. And own funds means it's been in your checking or savings account or retirement account. So that will be a requirement. So minimum loan is not going to be less than $1,000, but will not be greater than $100,000. I think when you saw the invitation about this this webinar that we were going to do, one of the very first families that received this, the Miss Mia Martinez, she received $100,000 that was there to assist her in purchasing this home. So we are using up to $100,000 per household to be able to purchase as down payment assistance. And again, this assistance is a deferred loan. It's deferred for 30 years, no payment requirements, and it does carry a simple interest of 3% over the 30-year period. After the 30-year mark, it would be due along with any interest accrued on the loan. You're able to make payments at any time in whatever amounts and whatever quantities. However, you're not obligated to make any monthly payments. You do have to occupy the property. It's one of those requirements that this is for a home ownership, not for an investment, for investment purposes. So if you do intend, or if you do move out, rent this property, then that money would be due and payable. There are other criteria that's going to apply, and we'll have more details on that as you apply for this funding. But this is some of the main points. At other times where this loan will be due is obviously if you sell the home, or if you refinance, you can refinance out of this loan. So what's really important about these programs is that for many borrowers, $100,000 infusion in down payment has been the key for home ownership. We haven't been mentioning any of the other down payment assistance programs that are available in the organization, or that are going to shortly become available. Other forgivable grants that we have here, and one that's going to be opening up on April 1. So in April 1 of this year, through the Federal Home Loan Bank of San Francisco, and this is a forgivable 4-to-1 match up to $22,000. Again, forgivable grant. This can be layered with this $100,000, so you can potentially see $122,000 in down payment assistance. So what does this mean? If somebody is purchasing, or if somebody is only eligible for a $400,000 purchase because income can only sustain that loan amount of $400,000, this extra money would allow that $400,000, on a just dollar-to-dollar basis, to be able to afford a $525,000 home. When you're looking at the $122,000 or so, you can increase that purchasing power by purchasing a $500,000 home with $100,000 down. Your loan amount is $400,000. You're making payments on a $400,000 loan amount and not on a $500,000 loan amount. So the income that you earn is able to go much farther, again, increasing your purchasing power. Or at the same time, if you're buying a $500,000 home with a $100,000 down payment, and you're financing $400,000, your payment is going to be much less because you're not making payments on $100,000, which on the flip side would increase your disposable income for the same exact purchase, the same exact sales price, but just not having to finance the full amount of that loan. So this is enormously important. This is a huge step. This is the first of its kind. This program normally was always geared toward low-income families, and the maximum that we would be able to provide was up to $58,000 per household. So this is the first time that the state and the HCD, or the Housing and Community Development of the state of California, has actually expanded this program to include moderate income families, or 120% of the area median income, and increase the total amount from 58 to 100,000. So this is big. This is a big deal. It's going to be a phenomenal opportunity for those that are able to take advantage of this program. And I think the next step of the question is going to be, well, are we eligible? And what we would do now is to schedule a phone consultation through VCCDC, going to the website, www.vccdc.org. vcccdc.org/APP and click on schedule a mortgage loan consultation. And it's there where we'll go through that, 30 minutes or so to go through your scenario, your situation, and determine if this could be something that you could potentially be eligible for. Or to answer more specific questions in your case, because we have had a lot of very, very unique scenarios, and not everyone, not all of them are the same. And this does require us to have some more communication with the state of California and their regulators, again, because it's also something that's been pretty new to this agency. Okay, any questions? I think we can open it up, Kaylee.
Yes, we have quite a few questions. And this will be sent out, this presentation will be sent out to you as a recording. So if you need to go back to anything, it will be emailed to you. So first question, do you need a certain credit score?
No, so the program itself is not FICO score driven. As long as we can get an approval for you on a first mortgage, whatever type of first mortgage that may be, a conventional Federal Housing Administration FHA loan, VA or USDA, if you can get an approval, and if we can get you an approval on a first mortgage and you're eligible, then this program would follow suit. So it is not FICO score driven.
Okay. Is the program for first-time home buyers?
It is, yeah. So the program is still designed for first-time home buyers, with the caveat of those that have actually lost their home because of the fires. There obviously would not be first-time buyers, so they can still be able to, they can still take advantage of the program.
Can you apply if you're disabled but your spouse works?
Absolutely, yeah. Anyone can apply. Spouse works, so you can use spouse's income. You use the income of everybody that's 18 years or older. That's part of the household income for the eligibility process. Now, in that situation, everyone's income would be taken into consideration for the eligibility of the program, but for the qualification of the first mortgage product, it would just be whoever is on the loan. So in this specific case, spouse works, another spouse is on disability. They may choose to want to use that disability income as part of their purchasing power as well. But yes, that you can definitely apply.
Are these funds specific to those affected by the wildfires?
They are, and so it's a two-tier: directly affected or indirectly affected. And again, directly affected is you were affected financially because you lost your job as a result of these fires, or you lost your home, or your home was impacted and no longer able to live there, or had to move if you were renting in a place and you were displaced. That's a direct impact. The indirect impact, which was felt much wider, is that the increases in rental payments. We were seeing 10% increases in rental payments because there was such an enormous demand for housing, but not enough supply. Again, we had already been facing a housing crisis when this occurred in 2017 and in 2018, but specifically the one in 2017, which affected us here really close, and we lost a certain amount of housing stock there. I think I don't know what the exact number was at the end of the day, but rents went up, and many people were indirectly affected by that. Many people have had to leave the places where they were renting because of the increases, have had to move back in with family. And when we show that proof of being rent burdened by 5% increases or more to their rental or the housing cost, then that's somebody that was also indirectly affected and can potentially be eligible for these programs.
Can any of these program funds be used in Santa Barbara County?
No, so this program specifically is for Ventura County. VCCDC, we also have the regular Cal Home loan that we can use. That one is specifically for low income. As I mentioned, that was really what was always designed, the programs that we always had access to, this is a little different because it expands the income eligibility. And that one is one that we have at VCCDC and is eligible in Los Angeles, Ventura, Kern, and Santa Barbara counties, but not this one specifically from here forward.
Can the down payment assistance program be used towards affordable units?
It can, absolutely. So an affordable unit, meaning that an affordable unit that is a low income restricted unit for low income households, or a moderate income restricted unit, it can absolutely be used for that. So we would have the resale restrictions, provide the first mortgage, any type of down payment assistance like this one here. And so the answer is yes.
If I can pay rent each month of $2,400, will I be able to have a mortgage for that amount or lower?
That would really depend. That's going to depend on the home prices, on your income. That's a very specific scenario, and we would have to figure out what depending on how much is put down. If it's $100,000, if this is the amount that's available to you, then we'd have to see $100,000 of what sales price would generate a payment of $2,400, taken into account property taxes, insurance, principal, and interest. You know, we can definitely work that number out in the organization and then figure if that is an actual home for $400,000. Now, the question is going to be, are there homes for $400,000 out there? But can we get a payment to be that? Absolutely. Now, will the market sustain homes that will generate that payment? We're not sure.
Do you have to use a specific lender if you qualify for the down payment assistance?
We do. So this program is been given to us at VCCDC. We've applied for these funds. We're responsible for these funds. VCCDC does the first mortgages and all the down payment, the processing, the funding, the underwriting for all of this concurrently with VCCDC loan products.
Says, I was not affected by the Thomas or Woolsey fire. Should I not be here?
No, that's a great question. And the answer to that is no. This program specifically is for Thomas Woolsey fire affected, rent increase of 5% or greater. This is a great something to look at. There are other down payment assistance programs that don't have these requirements. The other down payment assistance programs that is also a Cal Home comes from this same pot of money that we have at VCCDC, but not talking about that today, but we'll mention it now because of that. The question is that if you are a low income family, even if you were not affected, but just for the sheer, for the eligibility of being under 80% of the area median income for your household size, then there are down payment assistance programs still available to you. This one here have these specific requirements because it is a disaster recovery fund. From here forward is the name of the fund.
Who is responsible to prove the rent increase?
There's going to be documentation that is required. So if you have lease agreements, we could definitely do a verification of rent from third-party verifications to show the proof in your bank account that your income was, or you were making certain rent payments, and then they've changed. They changed to whatever your new lease agreement is going to be. You have a copy of that lease agreement, and you've got banks or receipts that prove what you were paying. So there are ways to be able to prove that, obviously. If someone was paying cash or under the table, that's going to be very difficult to be able to prove. So that is a great question because there is going to need to be done. We are going to need to verify that change.
If a person owns a rental home in another state, are they eligible?
Potentially not, because then you wouldn't be a first-time home buyer. One of the questions is, do you have any home ownership interest in any home anywhere? The answer to that would be yes, and thus, not being a first-time home buyer. In your property, in your income tax returns, you're probably deducting and showing the income from this rental unit and deducting any expenses or interest that you have on this. So even on your property or on your tax returns, you may be showing that, which again would eliminate eliminate the fact that you or would not allow you to be a first-time home buyer at that point.
If it is a deferred loan, what happens if someone dies before the 30 years?
That's a great question as well. So on this one, normally I'd have to look at the actual guidelines on inheritance or passing it on. If someone does pass away and the person that is inheriting isn't an eligible applicant, whether it's low income or the family itself was all affected by this fire, I'd have to do some more research on that one. But typically is for all down payment assistance, if the person that applies is no longer there, then that loan would have to be paid back, right? The heirs wouldn't be able to take over that unless we can show that there is an income eligibility even there. But on this one specifically, because it is unique and it was written for a very specific purpose and incident, I'd have to find out what the language on that would be.
If a person gets the $100,000, are you saying they owe back the $100,000 in 30 years?
Can you repeat that question, Kaylee? I'm sorry.
If someone qualifies for the assistance, does this mean that they have to pay back the $100,000 in 30 years?
That's correct. So you have to pay back the $100,000 and any interest that's accrued over that time. So if the loan carries a 3% simple interest rate and no payments are done on the loan and the principal amount continues to be $100,000, you would have $3,000 a year, which is the simple interest of that has accrued on that loan. So if you wanted to pay off this loan in a year, that $100,000 would be $103,000. If you wanted to pay off in 2 years, it would be $106,000. Now you are able to make any payments on the loan. You can pay off the interest every year so it doesn't accrue, or pay down on the principal, and the 3% is only accrued on the principal amount, not on the $100,000 at all times. So it is only on principal balance.
Can you apply for the $22,000 grant and the $100,000 grant?
You can.
Program.
Yeah, so you absolutely can. So this one is not considered a grant. It is a deferred loan because it's not forgiven. The $22,000 WISH grant, yes, if you're low income and you're eligible for the WISH grant and you're eligible for this program, that's exactly what we can do, is layer them. And as an organization, that's what we have done. That's basically what we are really known for, is to be able to layer any down payment assistance program that is available. We want to make sure that we don't leave any money on the table for someone that is eligible for it. So down payment assistance, forgivable grants, deferred loans, that's exactly what we would be able to do. As long as it is not coming from the same pot of money, federal, state, local, and you are eligible, we can definitely bring all these monies to the table for you. Now, I will say really quick, Kaylee, that the WISH program is not open up yet. The 2021-2022 funds will be open by the Federal Home Loan Bank starting April 1. So if anybody is interested in those kinds of programs, is getting started now, so that that you're able to take advantage of that program. That is a first come, first serve program also, with those that open escrow being the first to be able to reserve those funds for them. And so in the past, in the last 2 years, because the Federal Home Loan Bank has made some changes on how you have access to these monies, they have been running out pretty quickly. It used to be a 3-to-1 match. It's now a 4-to-1 match. So now I'm focusing on that just because of the question of the 22,000. So that for every dollar that the eligible buyer comes in with, it's matched by $4. And every year, 20% is forgiven. So if you receive the 22,000, 4,400 is forgiven every year after that. Until after year 5, it's completely forgiven.
May we choose a different loan term other than the 30 years?
You can. but the loan term does have to be a fixed rate term. So we do not allow adjustable rate mortgages. You know, as an organization, we don't have anything really against adjustable rate mortgages, but what we do is 30-year, 20-year, 25-year, 20-year, 15-year, or 10-year when it makes sense. So I think right now in a lot of the refinances that we've been doing, you know, we've been reducing the term because it just makes sense based on the interest rate changes. So yes, you can choose a different term as long as your income can sustain that payment, and it wouldn't be a problem.
What is the other down payment assistance that was mentioned up to the $22,000 grant fund? So that's the WISH program.
That's correct. Through the Federal Home Loan Bank of San Francisco. That's something that we've been, as an organization, we've utilized those funds since the mid 2000s and before in development, but since the mid 2000s. And if you look at the Federal Home Loan website, you know, our organization is featured there. One of our clients is featured there. They've come out to visit us, so you know, we've been quoted there. So we've utilized that product very well in Ventura County. In one specific year, we brought in about 12% of the entire amount into Ventura County, where the Federal Home Loan Bank has multiple states that have access to these funds. We brought in a good chunk of that annual distribution into Ventura County and Santa Barbara County, which was pretty amazing. You know, not to pat ourselves on the back, but since then, you know, when we're looking at training different banking organizations on how to utilize this funds and how to disseminate this money, VCCDC has played an important role in helping during that training process.
If your rent was $2,400 in 2017 and it's now $2,600, are you eligible?
If it's so if it was $2,400 in 2015 and it's now $2,600, 24.1%, so you're looking at about an 8% increase in rent, then yeah, because that would be greater than the 5%. Now, it's going to be important to also determine when those rent hikes happened. If it was 26% now because it was changed from a year before the fires, or did it happen after the fires? Those are the things that we would have to look at. But in theory, that percentage change is a yes. It's increased more than 5%, and thus you were indirectly impacted as a result of the housing stock and as a result of the fires.
And the best way to get a response for your specific situation is to schedule a phone consultation with one of our mortgage specialists. And again, that link is vccdc.org/APP. And that's the best way to get concrete answers to your specific situations. The answers that we're trying to give right now are general. So just wanted to put that out there. What is the income limit? Alex, can you share the income limit chart again? And again, you'll get this via email, so you can also review this once you get the recording. Are you eligible if you have had a bankruptcy?
Again, yes, because this isn't really FICO score driven. If you've had a bankruptcy and we can approve you for a first mortgage, and you're eligible and you meet the criteria for this program or any other down payment assistance programs, then yes, that wouldn't preclude you from taking advantage of this as a first-time home buyer.
If I have previously applied for first-time home buyer program years ago, is my application still valid?
So I'm going to try to rephrase the question. If you applied years ago but weren't able to move forward, weren't able to find a place, then absolutely you can reapply. That won't that doesn't take away your ability to as a first-time buyer or still being eligible today. If you took advantage of the programs and purchased something and then maybe sold that again in the last 3 years, no longer have had a home, then again you're a first-time home buyer once again. But if you have that home today, then no, you wouldn't be a first-time home buyer and wouldn't be able to apply for that. So I know that one of those is, I think, the way you were asking the question. I just wanted to also use the 3 different scenarios for everyone that's listening to kind of know the difference between first-time buyer and non-first-time buyer. But the first-time home buyer definitions would still apply.
When does the program officially start, and what is a purchase agreement?
So the program is official now. It has been launched. And the purchase agreement is the agreement when you are offering a loan. So once you get pre-approved with us and we determined your eligibility, you can now shop for homes. When you make offers and you have an offer accepted by sellers, then that is the purchase agreement. It's a fully executed when you've all agreed to terms. That's a legal document. Once that's done, that would be the start as a first come, first serve. You need to have a purchase agreement in place or in hand, executed by both seller and buyer.
So there's several questions about what assistance is available if you weren't impacted by the wildfires. So if you go to vccdc.org/lending, you will find a recording of a past webinar that we did on all of our other assistances. But again, the best way to get the most updated information on your specific situation is to schedule a phone consultation with us. And again, that's to schedule that, it's vccdc.org/APP. There's time for a few more questions, and I will put up our contact information at the end in case we weren't able to get to your question. Is there a limit of how many people could qualify for this program?
There is. So we have $3 million available in this program, and we're going to be providing up to $100,000 per household. Not everybody's going to receive the full $100,000 if it's not needed. There is one guideline, one written guideline is that if your housing payment is less than 33% of your income, then we'll only provide assistance to where your housing cost is 33% or higher, not 33% or lower. So meaning, if your housing cost is only 25% of your income, then you're going to be fine, right? We want to make sure that we use these funds to households that are definitely going to need the monies to be able to qualify for homes and to ensure that their housing cost isn't overburdened.
If we're granted the $100,000 in assistance, are we still required to bring in the additional 1% from our own funds?
Yes, so the 1% is a requirement to be able to get these funds. We need to be able to show that the buyer is also contributing from their own monies. Anything else could be a gift. We have borrowers that have gift funds, but we cannot have where 100% of the monies is coming from gift. Borrower does need to be able to contribute that minimum. So yes, that's still a requirement.
Will overtime wages be counted towards income requirements?
It is. There is a very unique methodology to calculating on income calculations. The eligibility methodology, which does take everything into consideration and projects forward, and then the qualification for the first mortgage, which takes more of a historical approach, and that's what we do here. So yes, all of that is important. All income figures are going to be a part of this projection for eligibility.
If I'm already pre-approved, what's the next step I should take to see if I qualify for this assistance?
It's the same step. You would still have to go through this mortgage consultation and then make sure that our pre-approval is getting pre-approved with VCCDC and determine the eligibility for the programs through VCCDC.
If I'm a household of one, can an additional household member move in after closing? For example, if I'm single now and later get married.
Yes, so that's another important question. I think when we look at these programs, and we get this because there's been a lot of people that are in some type of rental assistance. For purchase loans and assistance like this, it only looks at where you are at the time of that purchase. Afterwards, when people get married or they have children and the household size grows, that's no longer an issue. It's not considered. It is at the time that you are buying, though. We do want to know who is going to be forming a part of that household, and whatever income that those folks also have. So yes, it's only at the time of purchase. After, it's not something that we're going to be monitoring. The monitoring will occur to ensure that you are still occupying the property, because this is for owner occupancy purposes.
How do we show proof that we were indirectly affected by the fires?
So the indirect is going to be the rent. I think we answered a little bit about that question. Is going to be third-party sources. So your lease agreement, what you were paying on that lease, and the notification from the management company or your landlord that showed that the increase was going to happen. You know, an increase over a year if you were on a year annual rental agreement or lease agreement, and that you were making those payments. So there is ways to verify that through past bank statements or bank accounts or check receipts, and through contracts that were signed by you and your landlord or management company.
Can a person, if it's accepted for this program, will we be pressured to purchase immediately? How long do we have to find a home?
There is no pressure. It is on a first come, first served basis. So I think that those that find homes faster have a higher probability of getting funds allocated to them. Again, because they're not reserved for a certain period of time. It's just reserved for those that find homes on a first come, first served basis. So, but no pressure whatsoever. It's just that there is the possibility that these funds could run out at some point, right?
We'll take a few more questions and then we will sign off. And again, I'll put up our contact information in case your question didn't get answered. With this type of loan, are you required to occupy the home for a certain amount of years?
Yeah, this is for owner occupancy. So if this is a 30-year deferred loan, the moment that you wouldn't want to occupy it, you want to convert it to a investment property, rent it out, then those funds would be due in order for you to do that. Again, it's not for purchase, to move out, to have it invested. We really want to create homeowners here. We need these funds to go to people that are going to bring shelter to them, not for investment purposes.
Can the $100,000 be paid before the 30-year time frame?
It can, absolutely. There's no prepayment penalty on it. And payments can be done in whatever sporadic manner. We would collect payments in the organization. We service those loans. We're responsible to report on those programs and products and those loans to the state. So you can make payments here at our organization.
How long is a pre-qualification good for before it expires?
So the pre-qualification is really more on the first mortgage, and it's they're usually 90 days, which is the amount of time that the credit is good for. If we needed to update anything, it's easy to just reactivate that, reapprove people by just getting updated pay stubs or ensuring that there's been no major changes in their finances, so that the pre-approval can just be reissued.
Can we use our own realtor?
You can, absolutely. However, we do recommend that you are working with real estate agents that understand these programs. The vast majority of real estate agents don't really work with down payment assistance programs, unfortunately. And so, you know, it's very difficult when we provide assistance and there's different layers of financing. You know, it does become a challenge. So finding somebody that does have experience in working with this will ultimately be part of the success of your home shopping.
And then along those lines, someone's asking if we have referrals for a realtor, and we do have realtors who we've worked with in the past, so we know our trusted sources. We would be happy to provide you with a list of those realtors. Just you can contact us at 805-273-7800. And I'll give you one more question, Alex. Are you able to purchase foreclosure with these loans and grants?
Yeah, you are. But I think when we look at the term foreclosure, if a property goes into foreclosure, there are certain legal, and I'm not an attorney, but there are certain legal procedures that need to be taken. And usually a foreclosed property will have to go to auction. And as an organization, we've purchased a lot of properties that went into auction during the foreclosure crisis because we wanted to make sure that we would resell them back to home buyers, first-time buyers, or people that were gonna live in that property, never to investors. So usually you have to go to the auction and provide cashier's checks and have cashier's checks in the amount of that property. For these types of loans, there are financing, so it doesn't provide you the loans to go out, the monies to buy a foreclosed property. So that's why it's a little bit difficult. Now, if the property goes into an REO, a real estate owned situation where it's now being marketed to the public, then absolutely you can buy a home that resulted in foreclosure, went back to the bank, and now the bank is trying to sell it as an REO. That wouldn't be a problem.
Okay, that is it. We do have another presentation that we need to start in 5 minutes. We try to answer as many questions as we could, but if you did not get a response to your question, I am leaving our email address here, our phone number. You can also follow us on social media on Facebook, Instagram, Twitter, and we post updates on there. And you can also join our email list at vccdc.org. For those of you asking about our other programs, there's also a webinar where Alex talks about our other programs at vccdc.org/lending. That's also a great resource. But the best way I would say to get responses to your specific questions about our programs and about your specific situation would be to schedule an appointment with us. We are very busy at the moment, and we do try our best to answer phone calls, but because of the amount of work that we have at the moment, the best thing to do is to just get on our calendar and schedule that phone consultation so that you can have our undivided attention for that time, and we can answer every question that you may have about any of our programs or loans. We would like to thank everybody for joining us. Again, if you have any questions, I will leave this up for a few minutes. Contact us. We would be happy to help.